Welcome to the Cambridge Financial Podcast with Bert Salazar, CEO at Cambridge Financial Partners, LLC. This podcast is all about tax-preferred retirement planning, economics, financial risk management, and achieving a risk-free and successful financial life. Now, your host, Bert Salazar. Bert Salazar. Bert Salazar.
Hey, good day, everyone. Welcome to our podcast. This is episode 99. So next week we'll be in episode 100, and I have something very special for all of you. But this episode is number 99 of your Tax-Free Life podcast. We've been doing this for quite some time now, and we started with one person listening to our podcast. And now we have a few thousand that do downloads of our podcast every single week. So again, thank you so much for giving me that trust and that credibility. And we will continue to bring you information and, most important, education that is going to be suitable for each and every one of you as we start and you start to prepare for retirement and so forth. Now, obviously, the last few episodes we've talked a little bit about the Secure Act, and that's the one that took effect January 1 of 2020, and that in many different ways has actually changed the rules of engagement when it comes to IRA beneficiaries and so forth. So a couple of friends asked me the other day to talk a little bit about the importance of life insurance, and most important, the benefits of a life insurance audit. You know, when it comes to taking a look at all of the insurance contracts that you may own, life insurance contracts. Now, we also do audits on annuities and long-term care contracts and so forth. But our forte, obviously, has always been life insurance auditing. And I did a video which I sent to all my clients. And if you happen to be on my marketing list, you probably received that video as well, in which I talked about the benefits of a life insurance audit. And I went back to 2019, and we took a look at all the business that we had done in the different areas, from accounting to financial services, and estate planning, and obviously retirement distribution planning. And we try to figure out, how many audits we had done. So I went ahead and recorded this video, which I'm going to be playing for you. And then I'll come back at the end of the video and give you some feedback. Now, this is a very short video. This is only an 8-minute long video, but I think you'll find the benefits of conducting a life insurance audit from a business standpoint. So without any further ado, here is the short video that I recorded for all of my clients and marketing groups that I deal with on an ongoing basis.
Hey, Bert Salazar here. Last week, my team and I completed our 2020 business plan. As a business owner, is something that I do every single year, not only with myself and my family, but also our team here at Gables and Cambridge. And by doing so, we also went back and took a look at what we had done with our clients in 2019. So we go by specific products, a specific type of planning, whether it's accounting, whether it's financial services, whether it's tactical retirement blueprints or retirement strategies, whatever it may be, or a combination of all. But one of the interesting things, and this is something that we do every year, is that we specialize in life insurance auditing. And you would wonder what life insurance auditing is, but it is extremely important because the life insurance industry is changing just about every single day. So we went back to 2019. I took a look at all the business that we had done, and specifically all the audits that we had done in 2019. So I jotted down some notes, and I just want to share this with you because I think this is going to be very important for each and every one of you for 2020 and beyond. We actually conducted 84 life insurance audits, which on the average over the last 5 years, we've been averaging anywhere between 75 and 115 audits per year. So we did 84 audits of life insurance contracts. These are contracts that our clients or new clients who are coming in to see us for the first time, have purchased at some point in time in the past. So what was interesting is out of the 84 audits that we conducted, 70% of them, or 62 life insurance contracts, we found out that these policies were going to lapse, and the probability of lapsing was very, very high compared to the market. What that basically means is that these policies that were purchased anywhere between 7 and 12 years ago were actually going to die before the clients did. So why would you want to have a life insurance contract that is going to die before you do? And what's most important, each and every one of the clients that we communicated this to, that we ran the in-force illustrations on each and every one of those contracts, were not aware by any definition that these policies were going to die before they did. And by the way, some of these clients have existing financial advisors and insurance people that are helping them. The challenge is that the vast majority of these insurance advisors, they get and they meet with you and they basically sell you a contract, and then they don't talk to you about that contract for the rest of your life, because it is what it is. So one of the things that we do very good in our firm is to go back and kind of fix and repair all the mess that everybody else has done. So in those contracts, not only did we find that 70% of them or 62 of them were going to die, actually the vast majority of them were going to die within a 4-year period. So clients basically only had 4 years before all of a sudden they would receive a letter from the insurance carrier stating, hey, Mr. Jones or Mrs. Jones, if you were paying $5,000 for this insurance contract commencing on such and such a date, your policy premium is going to go to $12,000. And if you don't pay the additional money, then obviously your contract is going to lapse on a given date. So obviously that's something that we have done very well in 2019. We were able to repair the vast majority of them, not all of them, because some of the clients had some medical issues that they did not have when they first purchased a policy. So now we are repairing them by putting more and more premium into those existing contracts. Other clients just decided to cancel their contracts overall. Some of the other issues that we encounter when doing these life insurance audits, beneficiary designations, many of them, beneficiary designations were totally wrong. Either they were in the name of the wrong person, name of the wrong company. Some of the beneficiaries were no longer alive, and all of a sudden there were still beneficiaries on contracts. In a couple of cases, we found that a previous spouse was still the beneficiary to an existing contract, and the client didn't want that to happen. The other thing that we noticed is that in about 5 of the contracts that we reviewed, we needed to make a change to the ownership of the contract because it was not properly designed. And most important, many of these contracts did not have any of the chronic illness riders, the critical illness. They did have the terminal illness riders, but they did not have those 2 long-term care riders that are so critical nowadays for the vast majority of Americans that are very, very concerned about the risk of having a disability in retirement that the new policies have. Now, obviously, the challenge with some of those contracts is that they have been around for a number of years, so those hybrid policies were not aware then, were not available then, so therefore these clients have opted out for, repairing those contracts and finding new contracts that would provide those additional long-term care riders that were not available before. One major point before I leave you is that as of November 1st of 2019, all insurance companies now have to sell life insurance contracts under the new CSO rates that were passed in 2017. Now, the new rates are now the cost per thousand on a life insurance contract. It is cheaper now, it is lower now than it was in the last several years. And the reason for that is that every so often, the Commissioner's Standard Ordinary Office, which is the CSO company that runs insurance ratings throughout the United States, they go back and take a look at mortality rates over the last 15, 20 years. The last one that we had was the 2001 rates. So now insurance companies have to start using the 2017 rates, which would actually reduce the cost of insurance per thousand. Now, you may be older, so the premium may be a little bit higher, but you can offset that because of the fact that now the per thousand cost is cheaper, many a times anywhere between 25 to 35% cheaper than it was before. So if you have a life insurance contract and you have not done an audit of that contract in the last 2 to 3 years, then I encourage each and every one of you to do so. If you don't have anyone that can do a life insurance audit for you, please feel free to reach out to me. Myself and my team can do that at no cost or obligation to you. You can reach out to me at area code 786-766-1042. You can also send me an email at Bert, B-E-R-T, at GablesTaxGroup.com. And always remember that my goal for each and every one of you is to kind of change in the way that you see things, because when you change in the way that you see things, the things that you see change. So again, thanks for giving me a few minutes of your time, and we'll talk soon.
So as you can see, that was a video that I put together a couple of days ago, which I sent to everyone, just to talk about some of the benefits. And because it was a short video, I didn't want to go into a lot of the other details that are so important when it comes to choosing and maintaining, which is even more important than that, maintaining your life insurance program in place and priorities and so forth. One of the things that I'm going to do for episode 100 is I'm going to give you an overview of some of the critical areas that we have discussed in the previous 99 episodes. So we're going to be talking about the taxable buckets, the tax deferred buckets, the tax-free buckets, just a quick overview. We're going to talk about the fatal four, the risk of dying too soon, living too long, living with a disability, and living with eroding factors like taxes, inflation, stock market volatility, interest rate volatility, and opportunity cost. We're also going to be spending time on taxation, the taxation of, Social Security benefits. So that's going to be a really, really good podcast. It's going to be longer than normal, maybe 30 to 40 minutes. But it is episode 100, and I'm excited and very proud of being with you all this time to do that. But one of the things that I will be talking about a little bit longer on episode 100 is going to deal with, what do you use life insurance for? And one of the things that we find every year as we conduct these audits that I just walked you through is that many a times when clients first buy life insurance contracts, they do it for a reason. Most of them buy it for family protection. So, they have small kids and they're a young family, so they want to buy protection. And then as they get older and they start making more and more money and then start looking for ways to shelter some of that money, unless you have the ability to put money away in a 401k or a Roth 401k, then you'll have the limitations of the Roth IRA or the traditional IRAs. So 7702 plans, which are cash value life insurance plans, are part of the tax-free bucket. Is one of the most important areas of the tax-free bucket that everyone should be paying attention to. But sadly enough, very few Americans actually do. So as we conduct these audits, we ask a lot of questions, because the more questions that we ask and the more answers we get, the better job we can do in not only monitoring but also repairing and choosing the right contract for the clients, depending on their goals and objectives moving forward into the future. For many of my clients, they look at life insurance as asset protection, so they want to make certain that they can evade principal and interest of all their assets, not having to worry about running out of money before they run out of time, because of the fact that the life insurance contract would replace at death all of those principles of assets and that were invaded during retirement in order to create a more viable retirement distribution plan. Other clients may want to use it as a supplemental retirement plan, and if you're going to do so, then it is not the same contract as the one that you would use as asset protection. Others may want to use it as an education fund. And if you're going to do it that way, then obviously it's a different type of contract. So depending on what it is, and depending on the type of ice cream flavor that you're going to eat will determine what type of policy you have. Because, life insurance contracts are just like going to Baskin-Robbins. There are 31 different flavors, and all flavors are good, but it depends on what you like and what you're looking for. So in the next episode, obviously, we're going to be spending more and more time. But for those of you that are listening, if you happen to own a life insurance contract and that contract is current, then I encourage each and every one of you to either go back to your financial advisors and make sure that they do a proper audit. And there's a process that they must take in order to do an audit of those contracts. They need to have the software, they need to have the conduit to be able to do it properly for you. And if they don't have the ability to do that for you, and or perhaps the advisor that sold you that life insurance contract is either no longer in the business or already retired, and you have been assigned to a 1-800 number, then feel free to reach out to me. You can call me again at area code 786-766-1042. You can also send me an email at Bert, B-E-R-T, at GablesTaxGroup.com, and I'll be more than happy to help you along those lines. And by the way, the audits that we do, there's no cost or obligation on your side. The only thing that we ask is, if you find that we've done a good job for you and that we have earned your credibility and trust, and that you may want to implement some of the recommendations that we would make, then we would appreciate if you give us the ability to compete for your business at that point in time. So once again, always remember that my job with each and every one of you, and this is why we do so many seminars and webinars and podcasts, to continue to bring you the education that you're never going to find on the internet, is that our goal primarily is to kind of help you and your family change the way that you see things. Because when you change the way that you see things, the things that you see change. So be ready for episode 100. I will be very excited to be here with you next week, and I'm already working on that episode, so I'm putting a lot of good information together for you, and I'll talk to you soon. Take care and have a great day. Bye-bye.